Hey everybody, welcome back. Well, we have a lot to go over and we're going to just jump right into it. We all know that AMC and GME today were pretty active names. My focus was really on the AMC trade more than anything else. I did do the GME. We have to go through the indexes, PPI, why ARM is on a tear, what's going on there, what happened with Google and what to expect from it tomorrow. So there's a lot going on here, but let's just jump right into it. So in front of you is AMC. Now, I'm going to get through some technical levels here for you so that you can use this tomorrow. First and foremost, this is volume profile over here, volume by price. The red line you're looking at, that is point of control. That is where the majority of stock price is. It's not VWAP, but it's where the majority of stock went off at price. And you can see once we got over that, we just ripped. We bought calls on this today in the community. Did really well with them, made about 200%, and we'll see how they go tomorrow. But you can already see we're up another 20% on the stock at the time of recording this. And I'm leaning more towards this one than GME, and I'll explain why as this video goes on. But if we take a look here, we can see that we have a clear shot. Now I'm going to take all this off, and this is going to be a pretty technical video. We do have to go through PPI, but I want people to be armed and know what they're expecting tomorrow. So you know where volume profile is. We just saw that from 23. You really don't have anything until you get to this gap. So if we look at the gap and we look at where the 55 is, then the next thing that we would most commonly do is just look at where the 200 is. Now that 200 is going to put you right up here. Now if you look at that level, that's going to give you what we're going to refer to as a band of resistance, because you have the gap, you have the high of this, and you have the previous fill, and then you also have the 200-day. So that's going to be our band of resistance, and this is where we're looking for the target price tomorrow. As I said, we're going to be pretty specific here. We can get into the nuances during the day. What you want to see tomorrow is exactly what we did today, and I'm going to show you exactly how to do it so that you can do it yourself. You need it to settle down. So what we did was we just waited for it to settle down. We didn't just jump right in. We just let it do its thing. There was no need to really even do anything pre-market. And that's really important to watch here. But you see the first bar. You always watch the first bar. You can see the undercut there. Once you made that higher high and pulled back, this presented a really unique opportunity to get involved. It is very uncommon for names like this to take out a high and then take out a low and gap fill. It is very uncommon for names like this that have huge short interest. You have 20% short interest. It is very uncommon for them to take out a high, take out a low, and then gap fill. Okay, you have 20% short interest. I don't know where it is right now. I would imagine that it's actually increased, not decreased, because you tell people not to touch the stove the first time, and then they touch the stove anyway, right? So if we take a look at the AMC, and I don't like spending that much time on these, but you're in day one, so I think that we should spend some time on it and kind of go from there. Besides, CNBC is actually feeding it right now. So the other thing I'd watch is that 438, 440 level. But at the time of recording this, I'm just going to be blunt. I would imagine this thing trading up to 8 p.m., going over and opening up in Asia and going from there. And I'm going to get into a little bit later why I would focus on this one versus the others. You have to realize they are moving on nothing but conjecture and short interest, right? They didn't create more movie theaters. Nothing else happened. That's all we're trading here. Now let's get to GME. Now, GME was one that if you watch some of these videos, you'll note that we were actually talking about this a couple days ago. And the reason we was just because we got over that 200. And we were talking about this flag, and we were just referring to the volume because we're like, something's going on. And it's very clear that these people that are obviously the meme guys, I mean, you got to laugh. It is kind of funny. They were accumulating before he decided to tweet and get out there and do his his little Twitter dance or whatever he does. But it was very obvious that they've been accumulating for some period of time. I don't really think a meme refers to front running, but whatever. So here we are, and then we could just see this particular pattern. Now, if you overlay this again with something as simplistic as the 200-day, you could see this and you're setting up a golden cross. I'm trying not to laugh, but it is kind of funny. So why would I lean more towards AMC than this one? Well, first off, Robinhood has already started their games where they're not allowing certain people to trade 24 hours, and they're certainly not allowing them to trade 24 hours in GME. So the nonsense has already started. Number two, firms do not want to go through this again where they're going to have to borrow money because of people's short interest positions. So they are either going to buy them in immediately or they are going to prohibit the people that can trade GME. But the firms are going to protect themselves. They're not going to let it get out of hand this time. Why is this important for you? Because they're not doing the same restrictions to AMC. And this is really important to understand. Why did GME unravel last time? Now, if you don't remember this, what wound up happening was through this, and then you have all the splits. It was obviously a lot higher. Just one day you came in and your Robinhood account was just like, yeah, you can only do closing transactions. That's all you could do. You weren't allowed to buy any more options. You couldn't buy any more stock. They had to go or borrow money. And remember, Robinhood does not get their money from retail. Robinhood gets their money from the order flow. You're the revenue stream for them if you have an account at Hood, right? It's really Citadel that makes the money. I think it's something like 40 or 60% of their revenues come from Citadel. So whatever the overlord says is what they're going to do. I mean, it's really that simple. And there's nothing wrong with that. They're allowed to say we don't want to trade that name. Now, you can file a class action lawsuit against them and do all of that, but at the end of the day, they have the right to protect themselves and shut down trading. It's a fact. They do have that right. We'll get into that later. But if we take a look at what's going on here, and we're going to clean all this off for a moment so we can understand this, and people are going to say, well, it's not the same market cap. I get that. But you have to look at what happened today. And this is very important. Number one, AMC traded almost 500 million shares. Okay, if you go and take a look at GME, and people are going to say, well, it's a higher price stock. It doesn't matter. If you're looking here, you traded 181 million shares. Okay, you're trading 3x what you're trading there. If you go look at the relative volume here, 30 million shares or wherever we've been to where we are now, it's through the roof on a relative scale on what we're dealing with here to what you're dealing with here. So on a relative basis, this is through the roof. Also, there are no restrictions here right now. Now, there are restrictions, and they are going to start putting restrictions in on GME. And there's a reason why GME is only up 2% right now, and you're seeing AMC up more. I'm definitely not going to say ape strong, but I just have to be honest. This whole thing just makes me laugh, and I find it awesome. But it's really kind of great to see people do this kind of stuff because it just shows you how irrational the market could be. And people are going to come up with target prices. All I can do is show you where there is support and resistance with this and where you should be getting in and out. We did this pre-market. I made $7, $8, but it's nothing in regards to the actual, in my opinion, the actual AMC trade, what we did on the options and what can happen there again tomorrow. But the important thing about this is, can they both move? Yeah, I think one's going to come under scrutiny a lot faster than the other one. That's my opinion. I have another reason for that, and that's on the investment banking side. But we can get into that later. The other thing you need to watch is the option market. This is pretty important. Pay attention to this. Now, I was going to do I have a whole piece on smart money, dumb money that I'll cover later because I have to get into PPI as well. But in front of you is just a very simple screenshot. And this is from Market Chameleon. But when I use sites, I like to use them and I like to state where they're from. And I'm not going to have time to edit this because in between this, I have meetings and I'm actually trading. But I just want to point this out. AMC, this will show you the stock. This will show you the options volume statistics, and this will show you relative volume. And then it shows you previous close, and then it'll show you the IV rank 100% and what's going on there, GameStop 100%, right? It'll show you the implied volatility of the option. This is where it gets really interesting. The implied volatility of GameStop options are greater, right? Are greater AMC, but the percent change in IV is greater in AMC. Now, that might not mean anything to you, but if you're trading options, that's exactly what you want to see. That's why a lot of people that were trading the GME, the GameStop options, when they're trading them today, they're like, well, we're not making what we used to make. A lot of this was built in, and you're not seeing the big push like you're seeing here. That's the first thing. Second, if you take a look at AMC and you look at volume, that's the amount of volume that you have in options today on AMC. This is the amount of volume that you have in GameStop. Okay? It's almost 4-to-1. It's 3-to-1, really, right? You're about 3-to-1. Okay. So there's 3-to-1 AMC, more AMC options than Exxon. All right. The average volume is 149, and then you're here at 1.9. And then you go to GameStop and you're at 84, and then you go and take a look here. Now, this is where it gets, stay with me because this gets somewhat complicated. See the relative volume there of 8.2, and then you see us here at 6.1, and then we're up here at 12. Well, 12 was one of the highest numbers of any pretty liquid name out there today. So to be very clear about this, earnings, people are playing this name. This is the one that they're buying options on. This is the one they're trying to squeeze. Okay, if you want to get super Machiavellian, they could actually be talking about GameStop so that you don't pay attention to what they're doing to AMC, if you really want to get that into it. Now, the other thing that you have to realize about this is here's the market caps. AMC has a $1.5 billion market cap. This has a $9.3 billion market cap now. It is much easier for them to squeeze this company with options than this. There's also something else that they're doing that makes it way easier as of now. Now, this can change tomorrow, but pay attention to this part too. In front of you are GameStop options, calls. And what you can see really clear is they're not playing games this time. They're coming out with every single strike, every half strike, everything that they can come out with, full bore. Why are they doing this? To diversify the risk so that they don't have the same kind of squeeze they had last time. That's what the option market maker is doing. If you think they haven't prepared for this, and so there's a couple things that I would take away from this. Number one, this does not mean that GameStop is not going higher. I want to be really clear about that. What I'm simply suggesting is that if you're looking for the squeeze on this, the way that they're set up internally, it is very clear that there's one that has a greater degree probability of being squeezed than the other, despite what you're seeing going on out there in Twitter land. And I wouldn't be surprised if they knew what they were doing, and I'll leave it at that. But if you see here, meaning the people that are actually talking about GameStop are actually going after the other name. But if you take a look at this from 20 to 55, you're covered. And you'd say, okay, well, the stock's at 30 to 55. That's about a 67% move. Okay. And I get that. But again, what I would focus on here and what I think is really important for us, let me clean this one off. We're going to leave that there, and we're going to drop this screenshot in. And I want disclosure here. At the time recording this, I do have positions in this one account for some options on AMC. And I think it shows position right here, right now. All right. I have these. I paid less than that for it. We paid 48 cents, I think, in the room. Pretty sure that's what we paid. Take a look here. Give me 1 second. But I'm pretty sure it was 48 cents. Yep, 48 cents is what we paid for them. So at the end of the day, we have these outstanding. They went to like $1.75. You're up 200%. If you want to take something out and you're not willing to let them go to zero, then that's what you should have done. And I even put that out there at some point during the day, stating it. So let me see. The important thing about this is understand that all this can just go to zero in a day. They want to do another secondary or something like that, and they can absolutely do that. So that's definitely number one. Number two, with all of this, these down here, the 17s, these only go to 8. And that's a really important distinction, because if you're only going to go to 8, then you're setting yourself up to squeeze. They can always add more strikes. But I thought this was really interesting. So if you look here, and I'm switch screens for a reason, because I want to show you the actual strikes. But if you look here, between the pricing that you're at and where you are, you're at 6 after hours. You only have 3 strikes. That's all you have here for them to hedge that risk out, right? To not get a gamma squeeze. That's all they have left. That's where they're at right now, 3 of them. So where does that mean? Well, then go out a little further. Right? And if I went up to like May 31st, and I don't think the 24th had them either, these are only going to 6. Now, they can change this at any time, but they're setting themselves out to go out like a week or two, and they don't have any options out there yet. I thought that was somewhat interesting, and so that's another reason why I think that this could squeeze more than GME. And I know they're going to go after GME, and they're going to say that's the one. Maybe they get what they want. But I can tell you, even after hours, I think it's becoming increasingly clear that you're starting to see AMC, which is up 17% after hours, and GME is up 2%. And there's a reason for that, in my opinion. Comment below. I'm really interested in what you guys think about this. I find it hysterical, but quite frankly, when you do this kind of due diligence, it gets a lot easier to put yourself in front of a moving train. PPI is tomorrow, CPI is Wednesday. Tonight's the night that we're going to have to go over this so that you're prepped for it. Stay with me. You're going to have to go down the rabbit hole with me a little bit here so you can understand why these numbers are so important and then what we can do about it and how we can benefit. In front of you is non-farm payrolls. And the first thing you're going to say is, why am I looking at non-farm payrolls instead of PPI? Again, we're going to go down the rabbit hole a little bit. Number one, what we have to look at is non-farm payrolls. Why? Because of the change that we saw. Let me explain the change. You can see the dates right here, 4-5, 5-3, and 6-7 coming up. Previous, see how they're dropping. All right. Consensus was 243, 175. 243 was a consensus, 175. So if we do the basics, we would say that is roughly 75,000 in jobs would be the difference between those two numbers for non-farm payroll. United States non-farm payrolls. This is where we came in. This was previous. This was previous. So if we come straight across and we look here, well, that is one of the lowest numbers that we've ever had that's coming in right there. And that's very important for us to understand that is one of the lowest numbers that we've ever had, right? Okay. United States government payrolls is in the non-farm payrolls number. Now, this is really important for us to get because historically they've been adding about 70,000, 60,000, 70,000. Instead of the 72,000 that they had last time, or the 63,000 they had last time, they added 8. They added the lowest number possible in the past 12 months. It's actually further back than that, 12 months. So essentially, Had the government done what it's done all year and further, non-farm payrolls would have came in line and not have crushed. Now, why is this important? This is important because there are certain things that just are facts. Any election year, they need the economy to be better. The only way that this economy is going to get better for anyone that's going to vote, there's only one way. They're going to have to cut rates. It's the only way. And the only way to cut rates is to have this data be more favorable to cutting rates, because Powell can only do so much. So if they have the ability to put their finger on the scale, that's what they're going to do. And I'm going to be really clear about this. I don't care who's in office. My job is to ascertain the data, look at the data, and trade what the data is telling. So I don't care who's in there when I say this. Please understand that it is what it is. Okay? It's no different than what Reagan did with Volcker. We're not going to have a history lesson, but it's no different. PPI month over month. Core PPI month over month. They've been coming in line over and over again. PPI is coming out before CPI. It's only twice this year that that's happening. Go look how many times it happened last year. Very different this time around. Powell speaks at 10 o'clock right after PPI. You have more Fed speakers this week that are just foaming at the mouth to talk. Does anyone else find that convenient with all this data being dumped this week, right? So again, this is us going down the rabbit hole. We're going to go a little deeper down the rabbit hole, so stay with me. And then we're going to have the PPI numbers that are going to come out, all right? And this is what we've seen, 24, up. And I want to be real clear about this. This is not higher for longer, okay? That's not what you're saying. You're just higher. There's no higher for longer. They're acting like, oh, we're just hanging out in this range. No, you're going higher. And that's got to change for any chance of a rate cut. If you look at core's been going up as well since November. December dropped. And since January, we've just been going higher. Now, stay with me. That's PPI. And we must watch PPI tomorrow because that's going to be the precursor. I will show you at the end of this two things that I always use to determine how this number is going to come in. So if I look at month over month here for core, that's going to come out Wednesday, and we have to go through this now so that you understand it before the market closes tomorrow. But we will cover it again tomorrow night as well in some detail based upon PPI. So you're going to want to watch that video and how it correlates to this, right? All right. So then we have these numbers, and this is what we have to watch. Now, note what you're seeing here. Note the moves. And this is where it gets real interesting. We all know that food prices have been higher, and this is Fred. Now, Fred is the Bureau of Labor Statistics, and this is the website. Anybody can go there, and anybody can type this in, and anybody can look at this. And this is 12 months. And if we looked at something like this, pretty clearly we can all see food from here, from March to April, has gone higher. And we all know that there are certain three parts of this, right? There's food at home, there's general food, and there's food away that incorporate this. And we can all see that when we look at this data, that food in and of itself is going higher. And I don't think anybody would doubt that. And this is where it gets really interesting. Now, in front of you is food broken out. Anybody can go to this site as well. And this is just bls.gov. And you can break it down. 12-month percentage, just type this in by selected categories, and you can break it down. And you will see that I have food at home here. I have food right here. I have food away from home right here. Well, this is year over year. I just did for a year. Well, they're all dropping. If anyone in the comments can explain to me how this is dropping year over year to these levels, yet food year over year is going up, I'm all ears, and I would like to hear that. But I just don't see how it's possible for food to be plummeting in all these categories the way that it is, and people are going to tell me that it's still up. This is where it gets even more interesting. Administrations, when it's election cycle, do these things. It's our job to understand this so we can figure out how to profit from it. That's what we're doing here. Coffee, 78% in 9 months. Everyone go for a cup of coffee? I'm in Miami right now. It's $5 for an Americano. So it's being removed from the CPI. And you can see right here, if you can zoom in on that, that no longer will coffee be in the CPI for whatever reason, except the fact that it's probably because it's up 78% in 9 months. Thank you for going down the rabbit hole with me. I am very interested in your comments on that. I'm very interested what you think about that. I'd love to hear what you think I'm missing. Now, I've already gone through the AMC, and we've already gone through the GME. And the reason I spent so much time on those is because I think they're really pertinent for tomorrow, especially because they're going to not really be related to CPI, PPI. They're just not. They're just going to be their own little things. You know, maybe if we get the right cat meme, the right stock moves, right? I mean, it is what it is, guys. It is kind of funny. So let's just call it what it is. But at the end of the day, there are other things that we can utilize to determine what CPI or PPI is going to be. Now, if you've been with this channel for some time, the one thing I always ask is that, especially now, I ask that you share these videos. There's a lot in this video, and there's a lot happening this week. This is a make or break week for us, for the market. Because you have to assume, like, let's just say that I'm crazy with my tinfoil hat, right? The market comes in, this comes in hot. We still have to act on it. We still have to figure that out. Now, in front of us is crude oil. And one of the things that I always use, and I find great value in, is that I will go and take a look at like February 1st to March 1st, or I will go back to January 1st here, and I will just take a look at how those dates have played out on crude oil. And nothing crazy, just a back of envelope way of looking at it and saying, okay, if crude closed here, and then we're here, CPI usually comes in hot, right? And then if I'm here, CPI usually comes in hot. And people say, well, it doesn't really work that way. Okay, so oil is in everything, and so is gasoline. What I will say, and what has conveniently happened, is you had the single greatest move down that you've had in some period of time, just at the end right here. Now, some people say you don't use the first, you're going to use here. Either way, you're down. It's a question of how much. But crude oil is down. That's going to be reflective in PPI and CPI because the cost of goods, right? And how you're going to get those goods. Now, if we take a look at RBOB, which is gasoline futures, and what we're seeing here, and I'll show you another way to determine that probably gas is coming down and oil's coming down. And then we can argue and say, is this being manipulated as well? Well, we can get into that very quickly because I want to just really hammer this point home. I'm not going to go through the same thing again, but I just want to point this out. We're just going to do April and say, here's April 1st, and then we go to April 30th. And if we just click on here and we just drop to that level, you can see that gas is down about 3.8%. The other thing that you'll note is, when do tankers go up in value? Tanker stocks go up in value when what? When oil drops. Why? Why do tankers go up when oil drops? Because supply is increased and they want it out of the ground and circling the globe, ready to launch for when oil spikes. That's why tankers go up as oil drops. That's why people can never figure out, what do you mean tankers are going up, oil's dropping? That's when they start getting more tankers. That's when they go around the world. Now watch this. Now we all know the Strategic Petroleum Reserve is very low. And we know that he started buying, and we know when he started buying, and we'll show you in a chart in a minute, when it got down to a level where it was like 12 days left. Look what they did in April. They started canceling all the purchases. Well, why would they do that? Why would you cancel the purchases? You need the oil, right? Well, if you start looking at when they canceled to what's happened since that to oil, it's dropped. If you go back here where the bottom, this is when they started buying. Once they started buying, all this changed. What happened from here over to CPI? It started spiking. So by halting it, they're actually dropping oil. There's a lot of connecting dots here. And where am I going with this, and how is this actionable? My personal opinion is that they're doing everything in their power to drive PPI and CPI down into an election cycle, the same way they just did it with non-farm payrolls. And it doesn't matter, again, what side of the aisle you're on. The goal is for whoever's in power to stay in power and get elected again, right? That's what they do. But what's our job is to look at what's happening and figure out how to profit from it.